Welcome back to Exponential Finance, the podcast covering finance, technology and innovation, from our home in Japan and beyond. In this episode, we are going to talk about private markets. ADDX is among a few Singapore-based platforms dealing in private market securities, offering global funds, real estate investment trusts, structured products and pre-IPO shares at fractional ownership to investors. ADDX offers issuance, custody and trading of digital securities using distributed ledger technology and counts South Korea's Hanwha Asset Management and Tokai Financial holdings among its backers. Oi-Yee Choo has had a distinguished career in capital raising and mergers and acquisitions advisory before joining the startup world, most recently heading the investment banking business for UBS in Singapore. And now, please welcome Oi-Yee Choo, Chief Executive Officer at ADDX.
Oi-Yee, welcome to the show. It's great to have you here. I've been traveling a lot and finally back in Singapore. Welcome.
Yes, thank you for having me. I've been traveling a lot, and so it's nice to settle down and do something in the office properly with you.
Probably nice to travel again too, right after the pandemic. So you were at the Point Zero Forum.
Yeah, I mean, over the last few months, there have been a number of forums. The Point Zero Forum was very good. It was a collaboration, as you know, between the Singapore regulators and the Swiss regulators. What was happening there was an idea around getting very interesting thematics to be discussed at that forum. And so the first one was in Zurich itself. And, what we were doing in tokenization with Web 3.0, with DeFi, were about half the topics there in that forum, actually.
I saw some pictures and saw some of the participants, also some former colleagues of mine. So it must have been a very interesting audience and networking opportunity.
Yes, it was as much traditional finance as it was FinTech and startups like ourselves. So it was sort of the energy level and the exchange of ideas and the question as to whether some of these ideas are going to overtake traditional finance was certainly much debated at that forum.
It's wonderful that we can have these in-person networkings again. So before you started with ADDX, you already had a very long and very distinguished career in investment banking. So you were running investment banking for UBS in Singapore. And clearly that's a position that gives you great exposure into a variety of industries, gives you a great network. And so if somebody like you then looks at the next step for your career, there's abundance of opportunity and you've chosen ADDX. So I was curious to hear a bit about how that came about.
It was actually very interesting as well. And I think a lot of that was really seeing the industry sort of evolve and change from the lens of someone sitting at UBS. I'm not sure that traditional investment banking head would actually necessarily have the same perspective across the different banks. What gave me that perspective was actually the ability for UBS, whose distribution capability was very strong, both at the institutional level and the wealth management side, right? I mean, you know that UBS is one of the largest private banks in the world. And so the trends that I could see across distribution of products were actually across both, which was quite interesting. And over time, what was happening at the investment bank was also the time that I'd spent with the wealth management teams were increasing relative to institutional type distribution products. And I think what I did see, which specifically piqued my interest around ADDX and what ADDX could do, was how the world in investing in private bank was changing or in wealth management was changing. And how, sort of different types of public products, for example, were more suited to wealth management relative to the institutional capital, or the fact that there were many of the private market opportunities that started to present itself to the wealth management investors. That really opened my eyes to, okay, let's stop here for a moment. These were very traditionally products and investment opportunities meant for deep pocket capital and capital that had very long timing horizons, right? Insurance companies have a 10-year viewpoint, so do sovereign wealth funds, and they have deep pockets. They can afford to invest in a PE fund of 10 years and actually sit that out. But of course, in return, the growth profile and the ability to manage those private market ideas were far more powerful within a private equity firm that could manage these dynamics. So gave me a front row view. And that sort of when ADDX came about, it blew my mind that technology and cutting edge technology like blockchain could potentially then reformat what was traditionally institutional capital for retail capital. That sort of really got me thinking, what's the next wave? How does Singapore stay relevant? It wasn't so much a career choice that it was the intellectual curiosity of doing something like that, right? Because actually it's not been done very much before.
With that intellectual curiosity, because you joined first as a chief commercial officer and now like a few months ago have assumed the role as a CEO, was that giving you time to learn and have some training wheels to fully understand what this technology can do before formally stepping into that full leadership role?
Yeah, it was a good transition. It paved the way because as much as I had been in capital markets for a long time, and I understood a very good part of the business, which is the commercial side of the business, interacting with legal and regulatory, because that's what, bankers spend a lot of the time on. What I was missing was understanding the technology to a certain extent, right? I'm not a technologist, so I'm still very far away from my colleagues in terms of understanding the tech piece, but the appreciation of the full capability, what we could do, what we could not do, was something that I had to learn over time. We have very talented colleagues. I look at what we've built today, and we know that we have a product that's really, really powerful, right? But it takes time to understand. It also took time for the commercial side to give the right inputs to the technology side to make sure that we had the right build, the right priorities, and all of that. So it was a very good transition. Of course, it is a transition, it is different. But, I think that time that it took, I think gave me very good opportunities to learn ahead of that.
So what does ADDX do then? What is the 101 on ADDX?
ADDX was created as a platform to bring private market investing to individuals. And under today's construct, we are confined to accredited investors and corporate investors and institutional investors. But if you think about accredited investors, there really is quite a wide range, right, of high net worth individuals who are maybe sort of at a basic definition level, about 2 million Singapore dollars in net worth. That's kind of the standard. What we do is we take private market products and we then use technology to support the way we distribute and the way we manage and the way we work with individuals in their investing path. Now, why is that different? I mean, like sort of a lot of people ask me, it's the same as a private bank. Well, it's not really the same because these products are generally very large in size. So you need $1 million minimum ticket size to really invest in these things. Also, some of them are 10-year funds and they have lockups. And so as an individual, you don't necessarily want putting your capital in a 10-year product. You have no idea within 10 years when you might need liquidity. And that's very much unlike sovereign wealth funds. And the third is you don't have access. In reality, a few of the private banks have very good access, but you need to be a client of these very few private banks. So what we did was we used technology to be able to aggregate smaller ticket size investors for the purposes of finding them blue chip investment opportunities in the private equity space, in the private market space. So that's basically what ADDX does. We work not just with the technology to do that, we also have the licenses to do that. So on the regulatory side, we have a full distribution and exchange capability with the Monetary Authority of Singapore.
And I must admit, when I saw private markets first, I had an association that's probably a bit US shaped. So what came to mind was like Shares Post and Forge and essentially Nasdaq private markets, which are really focused on allowing trading of employee shares pre-IPO when they vested to create liquidity for startup employees, right? I think that's what they do for the most part. So what you're doing is very different in a way, or let's say broader from a product perspective. So you were really talking about private equity funds, etc.
Yeah. Yes, that's absolutely right. And if you think about the private markets, we all underappreciate actually how large the private markets is, because the public market assume a certain size and maturity, right, before you go to listing. So in reality, the private markets is probably multiple times larger than the public markets. Although within that size, there's obviously those that are what we call institutional grade product and potentially individual investment opportunities. But even then, it's a very large market and it's completely undertapped by retail investors. Now, in today's regulatory regime, retail investors are not really allowed or not given the framework to invest in private market products for a variety of these reasons: size, risk, liquidity. But we hope to change some of that over time.
I think you were saying you're aggregating essentially the smaller demand. And so for the private equity fund, it's still the same. They still get the million ticket size, but you basically break it down as from a technology perspective, easy for you to handle. So the overhead is small and still profitable business.
Yes. And what we're seeing is a lot of the fund managers out there, I think they also see us because we work very much in an aggregated way. So they just deal with ADDX as a platform. So all the interactions with the individual investors are done on our side. But we do obviously do things like webinars, and we do some roadshows to the extent that's physically possible. But that's why the fund managers see us as a conduit into the mass affluent investor as well. So in that respect, we actually get along very well. We find that we have many opportunities to do that. We just work with the fund administrators' processes as it currently exists. So we really don't create a different complexity for our partners. And that's, I think, why we've been able to bring on not just the Temasek linked group of fund managers, and we also work with the global managers, and in fact with Japan and Korea as well.
The ambition, obviously, is to democratize finance and make these products much more accessible, but you're still dealing with that accredited investor barrier. And obviously, it's a sensitive discussion with the MAS, I assume, and they are adventurous sometimes and careful other times. Where do you feel you are along that path? Is you like halfway there to convince them to open it up? How do you characterize that?
Yeah, I think that they have experimented certain modalities in allowing retail to invest in private markets. It's quite different. Crowdfunding, that obviously is quite different from what we do. But I think that we need to show that we are capable of creating that access and liquidity and the right products for the regulators to feel comfortable that actually the extension into retail is actually not all that far off, right? What are some of the issues? I mean, if you think about MAS and why they sort of a bit hesitant about private markets is exactly those issues, right? I mean, if you're stuck in a product for 10 years, that's high risk, not because of the product itself, but it's actually high risk because of the actual structural element of the product itself, right? Not necessarily the underlying investment. They don't want, mom and pops or, the Mr. sort of Tans of this world to get stuck in a 10-year product and have no exit. And individuals are far more likely to be financially sensitive that way. So I think that it is actually our responsibility to prove the use cases of liquidity. And I don't mean high-speed trading like the public markets, but I mean that in a post-issuance world, that means after the fund has been subscribed, even an investor should want a marketplace to sell his fund for whatever reason. He needs a new house, his son needs to go to college, there's some medical emergencies, that there is actually a very organized and open market path to that. Just set aside the other complexities around access and fractionalization. If I can solve and we can prove that we can solve this, I think this will open up the minds of risk managers within the regulatory bodies to rethink the appropriateness of retail investing in the private markets. I think this will take time. This will take an ecosystem. This will take a few other players like ourselves to maybe prove that use case. And once that happens, I think the regulators will be far more comfortable to allow retail investing.
I think that's a super smart approach, simply because you're not demanding. You're saying, we're going to show you, and this is how it works. We're going to convince you. Very often, I think the industry, whether it's fintech, blockchain, crypto, makes a mistake of standing there and demanding certain things. And that obviously creates a defensive wall, and the regulator pushes away. And so the smart way is actually to demonstrate it. So it's a very constructive approach. And you've been clearly also successful in that. Just a few weeks ago, you announced that you take crypto assets into consideration for the accredited investor status, which is the first in Singapore. So before that, there must have been this type of conversation with the regulator as well to make them comfortable that it works.
I thought that was a relatively simple announcement. In traditional financial institutions, the definition of net worth is clearly left to some interpretation, right? I mean, the banks need to be comfortable that the valuation done behind those assets, liquid or illiquid, you can put the pen to paper to it, right? There's a valuer that's willing to give you that piece of paper or that number. And of course, you must be able to sell that asset to get, any dollars to sort of show that you have that kind of net worth, right? And so our analysis is a very simple extension to that. It is not so difficult today to buy and sell crypto, in some ways get the cash back into your bank account. It really is not terribly difficult. Volatility of the asset is completely separate debate. But the fact is, it's more than even just probably easier to buy and sell than a piece of real estate. Our idea was really just to expand that calculation or that interpretation of net worth. I'm a little bit surprised that not more financial institutions have adopted it quicker, but I also suspect that there would need to be a little bit more clarity with not just the Singapore regulators, right? Because banks are multi-jurisdictional. They would then have to consider other jurisdictions as well. We did obviously cause a bit of an excitement in the market when we announced that, but we actually think it's just a very natural transition for us to do that. And we see crypto actually really as a continuum of alternative assets as well. So we have, for example, we have a digital asset fund and a DeFi yield fund with our partners who are fund managers in Australia called the Trovio Group. And we'll want to constantly explore how do we converge traditional alternative markets with crypto? How does that work? Should it be part of a bigger portfolio? It's the constant debate we have internally.
You have a very broad investor base that seems to be strategically placed. So you've got the Korean investor, you've got the Bangkok Stock Exchange, you've got Japanese investors also took part in the last round again. That seems like a very deliberate strategy to build partnerships as well. And it's either or both of generating investment flows or also possibly maybe at a later point entering into these markets directly. So which of the two is it?
Start off with sort of the first and foremost. I think where we've been very grateful is a number of these institutions, when they look at what we do, where they get very comfortable is we approach it from the regulated perspective. So we don't come from crypto unregulated and try and get regulated. We actually started off saying, because we're doing securities, we have to come the regulated route. So the groundwork that we put are around our regulatory regime, our compliance layers, and our team and the way we handle ops, very reflective of where the banks actually are, or traditional securities sort of infrastructure look at. And so we fit in very well, right? Because they understand our approach, even if we're taking a new tech approach to it. Some of them has actually worked with us on a couple of projects before, and then, they got wind that we were raising capital and they're like, oh, we want in as well. So what's really good is I think we have a list of institutional partners who actually started off working with us or wanting to work with us and then saying, hey, we think there's a lot of legs here. How do we then get even more front row seat? And obviously investing on our cap table is one of them. So that's one. Two is obviously, as you said, we have a number of investors, not just from Singapore, but actually regionally. And it's slightly reflecting how their own home market think about digital securities and digital assets. And, for example, Thailand is very advanced in that thinking. Japan is also quite advanced in that thinking. Korea is also starting to sort of really accelerate what they're thinking around digitization of securities. They see what we do, and so at the first get-go is get invested, see what we do, and then how do we work with them to either deepen the onshore to offshore capability and then offshore back to onshore. Is it baht versus US dollar? Is it yen versus US dollar kind of thinking? So you are right. I mean, actually our shareholders are multifaceted in our relationships, and that's been actually very good for us in the way we think about going out Asia and then beyond that as well.
And so one of your Japanese investors, Tokai Financial, which is by many measures, I think, the most digital Japanese brokerage. So there is a digital company award that the TSE together with METI gives out. And they've been doing this since 2015. Tokai won it every year, which is quite remarkable. It's the only financial company that achieved that. Is a good indication that they are capable of that way of thinking, of building a network of partners and working with a company like ADDX. And despite that, it is their first foreign investment, which is also always a great achievement, right? It's a big step for a Japanese corporation as big as Tokai might be to take that step. But then, as you said, they probably worked with you on deals before, got comfortable with the platform, and then the investment followed. So it's almost like a perfect recipe for any fintech looking to build relationship with a Japanese institution or fundraise to actually do something substantial. And again, similar style to what you described as the regulator, right? Make them comfortable by doing and then take the relationship to a second level.
Tokai, I mean, they're great partners of ours, right? I sort of had imagined that it would be slow, or at least the bilateral conversations would be slow. In reality, the bilateral conversations were very efficient. They were very quick. They knew what we did. They knew what they wanted to learn out of it. They worked with, for example, a partner in Japan to create a smallish single asset fund that was the sort of trial project. Where I think it took a little bit longer was making sure that the Japan regulators were comfortable. So again, we do these things by the book, right? And that sometimes takes time and, patience and explanation. So we actually spent it took us about 9 months maybe to complete that conversation to get Japan regulators, security regulators comfortable that Tokai was distributing a tokenized product that was actually listed and regulated in Singapore. Right? Again, imagine just the cross-border complexities and all of that. So we're very happy when that got done, and the team's obviously very keen to work on the second and the third and the fourth project, and we're now just sort of ideating around what makes sense, what would be the most efficient path, and how do we then deepen and broaden the conversations within Japan.
Again, I think very remarkable because we had the security token regulation since March 20. And I think all you've seen in the market so far are some pilot bonds, very small duration, small amounts. And so that you then, as a outside Japan party, get the regulator comfortable with probably one of the first real products in this market and under this regulation, again, is a very great achievement.
Thank you.
The latest news I want to cover was the China Construction Bank. I've been following throughout my career everything that's happening with the different schemes in China, with the On Connect, Stock Connect, and all these things, QFII, but I had never come across a
QDLP.
So if you could explain that to the layman, please.
Few formats that the Chinese regulators use for onshore to offshore and offshore back to onshore. The idea is to create paths for onshore capital in renminbi to be able to invest in offshore products, not necessarily in RMB. Right? There were a sort of few different routes and quotas. So that's kind of how they manage it. They work with licensed asset managers as well as banks to ensure that the movement of capital is managed, controlled, reported in the right way, right? Just because they don't want to see too much volatility for the renminbi in that respect. QDLP is a relatively more interesting part because the more traditional route is the QDII. But that's generally more for public funds and mutual funds. And we were given the advice that for private markets, QDLP is probably the easier route. And so we worked with our asset management partner to create that. And, we had gotten the quota, I think, last year, but was spending this year really just to set up the infrastructure to be able to handle, as I mentioned, right, all this reporting and approval process that's required within China. China Construction Bank is our partner in doing that, and we're now building sort of the pipelines, as it were, or the pipings for this to really happen in a very seamless manner. We're hoping to sort of start to think about the types of products we'd like to get approvals for. So we do think about probably end of Q3, Q4, where we would test with a couple of funds, which we think would make sense for that initial pile of quota to be looking to invest in.
Entering that market is a huge opportunity, obviously, right? Once you get a foot in the door and establish the flow, there are bottled up savings that are looking for suitable investment opportunities. You have a pretty good infrastructure now. You've proven it out across a number of different products. You've got a significant amount of funds raised, so you should have a good runway. When you look out now, 2 years maybe, what does ADDX look in 2024, middle of the year?
Wow, I got to bring out my crystal ball now. Do a little bit of gazing. Where we spent the first 2 years was developing the B2C concept. If you see our early evolution around the rebranding, the app, the web, it was really designed B2C. And a lot of that was because it was such a new construct that it would have been very difficult to attack it from a B2B model, right? An enterprise model. So we decided, look, we're going to prove this use case of democratization, right? Size, it's about liquidity, it's about access. And we're kind of really starting to see that show. Even if it's not that big yet, I'd love it to be obviously far larger. But we know, we get so much response so positively. we know it works, right? Where we actually had seen some interest levels starting to extend beyond the direct-to-consumer interactions, which is external asset managers, family offices, securities houses, wealth tech, wealth brokers, robo-advisors, private banks. And the full range out of that, there are a number of them who are now or have recently been thinking very hard about including private market on their shelves. And they would have never, ever considered it if there were no digital platforms like ourselves to help them, right? Because the private markets, it pretty much, we have a full origination team, full syndication team. We do have a legal team that takes the process through and does the due diligence. That infrastructure by itself, not even just the technology piece, is one that we invested in. Everybody recognizes to try and bring private market products to the shelf, then you need to create not just the tech infrastructure but the human infrastructure. And therefore we saw that trend coming. We're building an enterprise facing piece to our tech, and so that's something that we're hoping to roll out by the end of this year and early next year. See the scalability of that. And that's scalable across actually globally. That's the piece that's very exciting, and there's a lot of work being done there. The other thing that we're constantly thinking of is how do we sort of go global? And at the moment, we already have actually at the B2C level quite a global, list of investors. Those that have signed up on our platform. Actually, most of them are for Singapore, domiciled in Singapore, but nationality-wise, and we've got about 20, 30, maybe close to 30% who are outside of Singapore. And so we're already starting to attract investors globally. How do we then extend that? So whether it's further in Asia, together with our partners, maybe, sort of Middle East, Europe, that's also possible. So how do we do it in the right manner with the right investment to really make this business global?
As a marketplace, you have to balance the demand and the supply the way you described, right? You have to, if you get it on the shelf, you get more demand. It also need to have more supply of the funds. So you need to get more of these funds also on the platform. Is there some goal where you say you want to double, triple, quintuple kind of the number of the funds? Because once the platform exists and it's scalable, the number doesn't really matter, right?
Supply isn't really the issue, because every single one of our partners that we've done one fund for will do a second one with us and a third one with us. So in the size, they're super excited if we could scale with them. So I don't really see that as a big issue. And plus, we're really working with the top quality managers in the world. Like you said, we want to make sure that the enterprise business, because that's the one that's obviously going to scale very quickly when it does. And so that will then really drive deeper conversation with banks and, asset managers, both sides. That's kind of where we think that will be. From a size perspective, we had forecasted we would hit 1 billion transaction value by next year. I think we're just shooting close to the 500 already, right? And, we think Q3, Q4 will be very exciting.
Wonderful. It's exciting times. It's like with the infrastructure in place, you're hitting the inflection point where you're really hitting like the S part of that curve, and it will be, I think, fun to watch what you're building and how this transpires really over the next 18, 24 months in terms of markets, clients, customers. Really appreciated the conversation. It was very, very insightful, and wishing you all the best for the future.
Thank you. Thank you very much. Great chatting with you.